Good morning, Hong Kong, and welcome back to another episode of Hong Kong Insurance 101. In recent weeks, we've examined the definition of risk, looked at how contracts are created, and discussed the formation of an agency. Continuing our discussion of the technical aspects of insurance, this week we're looking at a fundamental and core principle of insurance protection: insurable interest. First things first, in order for an insurance agreement or contract to be valid, it must be established on the basis of a policyholder's insurable interest for the risk being covered. For the purposes of this video, and for the needs of insurance in Hong Kong, we can assume that the interest of the policyholder means their financial relationship. Therefore, a good definition for insurable interest in insurance in Hong Kong would then be an entity's legally recognized relationship to the subject matter of insurance, which gives them the right to effect insurance on it. So, in order for insurable interest to exist, a number of different criteria must be satisfied. The insurance must cover a person, property, liability, or legal right which is capable of being insured. Without this, the contract is not valid. The risk being covered must be the subject matter of the insurance. The claim is payable upon mishap to the subject. And finally, the proposer must have a legally recognized relationship to the subject matter of insurance. Now, on first blush, this may seem relatively straightforward, especially as we have stated above that this interest in this context can be taken to mean a financial relationship. However, a financial relationship alone is not enough to create insurable interest. A credit lender, for example, may have insurable interest on a debtor's life, but would not have insurable interest on the debtor's property unless that property had been mortgaged to the lender. For most types of insurance, insurable interest is required at the time of loss. If, for example, you have a home contents insurance policy that states that a specific piece of jewelry is to be covered and you suffer a loss, but you have already sold that piece of jewelry, then the jewelry can't be covered on the item as you no longer have insurable interest on it. You've sold the jewelry, it's no longer in your possession, therefore you do not have a right to insure it. However, in the case of life insurance, insurable interest is only required at policy inception when the insurance is created. This is because you are automatically assumed to have insurable interest on someone like your spouse or any of your dependent children. As such, you can create an insurance policy for them at any time during your marriage. So while you're with your wife, you're able to take out an insurance policy with her while she is still your wife. The policy is then valid even if you should separate or divorce because you had insurable interest at the time that the coverage was created. Insurable interest is a complicated subject, but it's critical towards ensuring that your policy is covering you in the manner you need it to. Unfortunately, you cannot take out an insurance policy in Hong Kong without insurable interest, so it's critical that you understand exactly how this impacts you. That's us for this week. As always, we hope you have a happy and healthy weekend. Please remember to like and subscribe to stay current with all our content as it comes out. And don't forget to ask CCW. We're simplifying your insurance.